This is Matthew Cratter from Trader University, and today I want to cover a topic that a lot of you have been asking for, and this is the topic of Bitcoin loans and Bitcoin lending. How do I borrow money against my Bitcoin so that I never have to sell it? And again, I should say none of this is tax advice or investment advice. These things are very fluid and they're constantly changing, so be sure to consult with a tax advisor before making any moves. So whenever I say I'm never going to sell my Bitcoin in a YouTube video, I always get in the comments saying, well, you're never going to get to enjoy your profits, this sort of thing. And what I've been trying to point out is there are two main things. You should never sell your Bitcoin. You should always hold your private keys. And I guess a third thing is that you can always borrow against your Bitcoin if you need some money. So that's what this video is going to be about, how to take out a loan against your Bitcoin holdings. What happens is you'll post Bitcoin as collateral, and then you will receive US dollars or US dollar stable coins at some interest rate, borrowing against your Bitcoin collateral. Now, what are the advantages? You get to enjoy your profits, as we say. You can use it to maybe buy a Bitcoin Citadel. Here's a cool one. It doesn't look like it's still for sale. This is in New York State, and it looks like a normal house at the top, but if you look down below, it actually has nuclear bunker facilities. So if you want to be a crazy Bitcoiner, you could buy one of these with your Bitcoin loan. The other nice thing about not selling your Bitcoin, instead taking a loan against it, is that you'll still own your Bitcoin if you believe it's going to keep going up for a very long period of time, as I do. I think each Bitcoin's eventually, certainly by 2028 and probably much sooner, each Bitcoin's going to be worth $1 to $3 million. Then it's going to move on to $5 million per Bitcoin, $10 million per Bitcoin. If you don't believe this, watch my other videos where I go a lot into the modeling behind this. The third advantage of never selling your Bitcoin is that you will not owe any taxes against it. You will not owe any capital gains taxes. If Congress changes the rules and institutes a wealth tax, then people above a certain net worth will be in trouble. But barring that, if you don't sell your Bitcoin, at least at this point under the current tax law, if you don't sell your Bitcoin, you do not owe taxes on it. So what are the different services you can use? BlockFi is one that a lot of you have heard about. This one I don't like quite as much, simply because it is centralized. You don't get to hold your own private keys. But here's a perfect example. I could borrow $100,000 and I would need to post four Bitcoin. So this has a loan to value of roughly 50%. So we borrow $100,000. We have to post 4 Bitcoin against that, which is 200K. So if you do the ratio, that's a 50% loan to value. So BlockFi would be one way of doing it. I want to talk about some more decentralized ways where you get to hold your own private keys. But before I do that, I would just ask, if you're enjoying this video so far, to be sure to hit that subscribe and hit that like button. It really helps get the news out about my channel. Here's one that I've just discovered. I haven't done a whole lot of digging into this. This is Lend at Hodl Hodl. Looks like there's a new podcast from Preston Pish over at the Investors Podcast Network, talking with Max from Hodl Hodl about how this works. If we just look at the website, we can see that it is the Bitcoin is these Bitcoin loans are non-custodial. There's no third party involved. It's all P2P. You enter into a multi-sig contract with someone. You post your Bitcoin into the multi-sig address, and you can borrow money against it. And what's neat about this is that there is we should go through again. Contract is created. Our platform generates a unique escrow for it. Then the borrower deposits Bitcoin as collateral directly from his wallet. So you send it to this address. The lender transfers the loan amount to the borrower. And then when the loan is repaid, the lender releases the Bitcoin. And we're going to talk a little bit about how you actually never need to pay off these loans completely. But this is how this works. It's completely P2P. It's peer-to-peer, and so you would choose your own interest rate. You could it's a marketplace of interest rates. In other words, you can decide what currency you want to borrow in, and how much you can. So you can borrow in Tether, you can borrow in USDC. Obviously, if you borrow in one of these stable coins, you can then convert them to US dollars if you need to use them within the fiat system. So this is a company that's just getting started. The interest rates look a bit on the high side, but again, this is a marketplace, and marketplaces drive competition, so interest rates will move down over time. So I like this one because it is peer-to-peer. And next one I wanted to talk about was Unchained Capital. This one is also nice. There is sort of a centralized authority behind it. There's a corporation, but there is multi-signature custody. So you get to hold one of your keys. Unchained Capital will hold another key, and then there's a neutral third party that will be holding the. So you'll hold one key. Unchained Capital will hold another key, and the third key will be held by a neutral third party. The cool thing about these Bitcoin loans, there's no credit checks. You're posting pristine collateral. They don't need to know anything about your personal history. They don't need any details like that, because once you post your Bitcoin, they have your Bitcoin, and that is the basis for the loan. That's the collateral for the loan. Another important thing to look into when you are borrowing against your Bitcoin is when you deposit it somewhere to borrow against it, will they lend it out again? This is called rehypothecation. There's a little diagram here that I will link to, but there's much more risk if you lend your Bitcoin to someone and then they lend it to someone else and they lend it to someone else. This almost becomes like fractional reserve banking, which we have in the fiat system, and it's very unstable and can lead to bank runs. It can lead to there's a lot of counterparty risk involved. So one nice thing about Unchained Capital, and I assume HODL, is that there's no rehypothecation. I'd have to check to see whether BlockFi does rehypothecation. This is a little bit more, BlockFi is a little bit more of a black box because it's centralized and you're not holding your own private keys. So those would be the three services. The question I often get when I talk about Bitcoin loans comes from people who say, why would I want to go into debt? I thought the whole point of Bitcoin was to get out of debt. You'll see this comment often on my Amazon reviews and in my YouTube comments. And I think this misses a distinction between different kinds of debt. There's pure debt, and then there's collateralized debt. So let's say that you owe a lot of money on your credit cards or your student loans. This is just plain outright debt. It's not collateralized. You owe this money. If it's a student loan, for example, it can't even be discharged in bankruptcy, unfortunately. A lot of people don't realize actually Joe Biden was one of the original people behind this when this law was passed in Congress in the early 2000s. He was really in the pocket of the student loan company. So it'd be ironic if he's the one who leads toward student loan forgiveness. But that's a whole sidetrack. Basically, this would be normal debt that regular middle-class people have. You have a lot of credit card debt, or you have a student loan debt. This is very different from the kind of debt that wealthy people have. And if you hold Bitcoin for long enough, you are going to become a wealthy person. So you need to change how you think about this. Let's say that you own one Bitcoin and it's now trading at $1 million. I'm just going to make the math really easy. Let's say you bought it at $10,000 per Bitcoin, and so you have this huge deferred capital gains tax. You have this huge paper profits. Rather than selling and having to pay taxes on it, etc., you could borrow $500,000 against that $1 million. Again, this would be 50% loan to collateral or debt to equity. The Bitcoin's worth $1 million. You borrow $500,000 against it, and you use it maybe to buy a piece of real estate. And you definitely want to use it for something that will benefit from Fed money printing. You could use it just to buy a nice car or something like that, but it might not make as much sense unless you just do it with a small amount of the money. So this is a very different kind of debt. This is what's called collateralized debt. And you're not really in debt because you have $1 million worth of equity here and you've borrowed against it. This is very different from the kind of debt that working class and middle class people get themselves into. This is the kind of debt you'll often see really wealthy people, even though they have the money, they will take out a big mortgage on their house because it's the interest is tax deductible, and they don't want to tie up a lot of capital. They want the leverage. And the key is you just have to be able, whether it's a Bitcoin loan or a mortgage on your house, obviously you need to be able to make the monthly payments. And so we're going to talk a little bit how you can do that with a Bitcoin loan. But there's a lot less risk here with a collateralized loan. The biggest risk, obviously, is that Bitcoin falls a lot. If it falls 50%, then your debt to equity ratio goes to 1. You may start to get a margin call at a certain point, which we'll talk about. Likewise with a house, if you put down 20%, really the house has to fall 80% before you get in trouble, or before the bank gets in trouble. But these sort of collateralized loans are much different from uncollateralized debt like student loans or credit card debt. And I should point out that borrowing against assets is really what the billionaires do if you study them. Elon Musk does this. Gates has done it in the past. I believe Jeff Bezos is still doing it. And it's not like these guys don't have the cash, but they want to, for example, in the case of Musk, he wants to retain upside in his stock. He doesn't want to sell his Tesla shares, but he wants to maybe buy a new house or maybe even use the money for investments in other companies. Here's an example from the Wall Street Journal, May 8th, 2020. About half of Musk's Tesla stock was pledged as collateral for his personal loans. This was back in 2020. Obviously, Tesla stock has gone up a lot, and so these loans now, if he still has them, and I don't know, but if he still has them, they're now a much smaller percentage of his net worth than they were before. So this is why if you happen to own an asset that you understand really well because you're the founder or because you've really studied Bitcoin and you don't want to give away the upside and you also don't want to pay taxes, borrowing against it is a great way to go. Now, the next question I always get is, well, how do I pay off the loan? If I borrow $500K against my $1 million Bitcoin and I buy a house with it, am I going to have to sell that house when the loan comes due? And obviously, this is not something you want to do. No, you won't have to do that. When your loan gets close to maturity, you simply pay it off by taking out another loan, either from the same source or a different source. I'm sure a company like BlockFi or Unchained Capital would be very happy to roll your loan when the time comes. You could also probably, I think certainly with Unchained Capital, there's no prepayment penalty. So you can actually refi your loan in the same way you would do with a house. So if you find a way to borrow Bitcoin at a lower interest rate, you would just borrow using that, and then you would use the proceeds from that loan to pay off your old loan at a higher interest rate. This is just a similar thing you do when you refi a mortgage on a house. This is called rolling your debt. And as a result of this, if everything goes well, if Bitcoin stays at the level it was when you borrowed against it or goes up, and if you're able to make the monthly payments, you'll never need to pay off this loan. There's no reason you ever need to pay it off. And I'm not sure exactly the estate implications of this, but I imagine they can be rolled to your children and grandchildren as well. Now, one way to look at this is that if you I'm using really round numbers here, you can use lower numbers if you want. If you take out a $500K loan when Bitcoin is at $1 million, your debt to equity on that would be 50%, just $500,000 divided by $1 million. Now, let's say that Bitcoin appreciates in the following years while you're still holding onto this loan, and that one Bitcoin you own goes to $10 million per Bitcoin, then your debt to equity ratio is just 5%. It's fallen massively. And this is what happened with Elon Musk's loans as well, obviously. And as your Bitcoin appreciates, your collateral goes up and you can now take out another loan against that increased collateral. So in this case, I could probably borrow another, call it another 45%. So I could borrow another 4.5 million. And in this way, you can see that this combination of Bitcoin's price going up combined with rolling your loans means that you will actually have more than enough money. In the first case, you've got 500K to work with. And then after Bitcoin's gone up, you still have your $500,000 house that you bought with the first loan. And now you have about $4.5 million additionally that you can borrow against that same Bitcoin. And the whole time you haven't paid any taxes against it. So this is really the reason you never want to sell your Bitcoin if you're as bullish on it as I am. The interest rate on Bitcoin right now is fairly high. If you look through these services, it seems to be about 10 to 12% annual interest rate. Now, this is not as bad as it sounds if you realize that Bitcoin goes up on average roughly 200% every year. Maybe it slows down in a couple of years and only goes up 100% a year, but it's okay to borrow against something and pay a 10 or 12% interest rate if the underlying asset is going up by a lot more than that. In this case, it's going up by 10x or 20x the same rate. It's going up by 100 to 200% a year. I expect interest rates on Bitcoin will continue to fall. We're still really early. I'm not doing any Bitcoin loans now, simply because I think Bitcoin will be at 200K by the end of this year and will be at $1 million before we know it. I would really only consider starting to borrow against my Bitcoin is when it hits, when the value of one Bitcoin hits $1 million. As this happens, the interest rates on Bitcoin will continue to fall. This is simply because Bitcoin is the best form of collateral that you can imagine. And institutions, pensions, corporations are discovering this. This is why they're buying Bitcoin and putting it on their balance sheets. It's liquid. It's really fast to send. If you compare it to something like a house, if you take out a mortgage and you default on your mortgage, the lender needs to sell your house. This is very expensive. The lender first needs to go through various legal procedures and foreclose on you, and then list the house and sell it. And there are a lot of fees involved. There's a lot of time involved. Bitcoin loans are very easy. You can liquidate them instantly if the person stops paying their interest, or if the value of their collateral falls too much. And so I would expect interest rates on Bitcoin to certainly fall below where mortgage rates are now on houses. You can get a 30-year fixed for anywhere between 2 and call it 3.5%, depending whether you're using a conventional loan or a jumbo. But either way, Bitcoin should trade eventually in a few years. It should trade below mortgage interest rates simply because it's such a great form of collateral. And so you can imagine in a couple of years being able to borrow against your Bitcoin at 1% a year for a 30-year term. In this case, you would never really need to worry about it, assuming you thought that Bitcoin was going to maintain its value or go up. You can imagine borrowing against $1 million worth of Bitcoin. Let's say you have you can borrow against the full amount, just to make the math really easy. 1% a year, that would mean that you could borrow $1 million and just pay $10,000 a year, which would be a 1% interest rate. So the great thing about these Bitcoin loans is that we would expect the price of Bitcoin to continue to go up as the interest rate is associated with Bitcoin loans falls. And so you're doing well on both sides. The rate at which you can borrow and you can roll your loan, you can refi, is falling at the same time that the collateral value is increasing. The third question that I always get is, well, how am I going to make these monthly interest payments, especially if I want to retire, for example? So the three ways I can think of, obviously, if you're going to keep your job, if you have your own business, if you have rental income, you can just use that to pay the monthly interest payments or the annual interest payments, especially if you borrow against your Bitcoin and you buy an investment property, a house or a commercial building that throws off cash flow. You can use that rental income to pay the interest rates on your Bitcoin loan. And you can imagine when interest rates get down to 1% or 0.5%, this will actually be a really efficient way to finance the purchase of real estate, especially investment real estate. Now you can also, another way of doing this is you can borrow a little more than you need against your Bitcoin and then use that to pay the loan. So maybe you borrow, you buy a house for, you buy real estate that's worth $400,000 and you keep that $100,000 to just pay off. So you take out a loan for $500,000, you buy a house for $400,000, and then you use that extra $100,000 just to make the interest payments over the 1 year or 5 years or 10 years, whatever it is. So you can always borrow a little bit extra against your Bitcoin and use that to make the monthly interest payments. The other thing you can do, and would really be my last choice, is that you could sell off a little bit of your Bitcoin every month or every year to make the interest payments. This would be the least desirable thing to do, but if you needed to, you certainly could do this. If you did this, though, you would owe taxes. You would owe probably long-term capital gains taxes on the Bitcoin, not that you borrowed against, but the Bitcoin, the tiny pieces of Bitcoin that you sold. Another thing that people have been talking about doing, this is, I think, a little bit too risky, at least for my risk tolerance, but some of you may be interested in this. You can actually take out a loan now against your Bitcoin to buy more Bitcoin. So if you own one Bitcoin at $50,000 now, you could go to Unchained Capital. You could probably easily borrow $10,000, $15,000, $20,000 against that, and you could use that to buy more Bitcoin. And so you create a leveraged position. In this way, it'd be possible actually to have more than 100% of your net worth in Bitcoin. If you already have 100% of your net worth in Bitcoin, which would obviously be very aggressive and very risky, but if you're doing that, you could borrow against it, buy even more Bitcoin, and you could end up being 120% long Bitcoin versus your net worth. Now, the problem with this is that you still need to be able to make the monthly interest payments. You also, if Bitcoin falls a lot, you'll need to post more collateral. If you're borrowing at a 50% loan to value, Bitcoin would really need to fall 50% before you got a margin call. It seems that the volatility of Bitcoin is going down. Of course, we never know what the future holds. And so if you want to be really conservative, you would borrow less than 50% of your Bitcoin holding. So let's say you borrow 20%, you have $1 million worth of Bitcoin, you take out a $200K loan, that'd be 20%. You would not get a margin call or have to post more collateral as long as Bitcoin did not fall 80%. And even in the great bear markets, the most Bitcoin fell was 85, 90%. I think it's unlikely we get that deep of a bear market this time around. But obviously you could, if you think it's going to be more, you could borrow 10% against your holdings or something even more conservative like that. Final note from a tax perspective, it would be my opinion, this isn't tax advice obviously, but that if you borrowed against your Bitcoin to buy a real estate investment property, let's say you buy a large property that has 2 houses and you're going to rent out one of the houses, you're going to live in one of the houses yourself, the interest payments on your Bitcoin loan would almost certainly be tax deductible, especially for the investment side. So let's say you just completely use your Bitcoin loan to buy an investment property. In that case, you probably would be able to deduct the entire cost of the interest against the rent that's generated by that property. And so this would be a way to sort of diversify your holdings and turn a significant Bitcoin holding into a cash generating investment. And so in this way, you would not need to sell your Bitcoin, but you would still maintain the exposure to Bitcoin's upside. You wouldn't owe any capital gains taxes, and you would use a Bitcoin loan to fund a property that would then pay you as the landlord monthly income. And so this is a way of sort of monetizing Bitcoin without selling it and converting it to monthly cash flow. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.